Hi guys, Piotr here, this is LiteFinance Global YouTube channel. It's my pleasure to be with you again. It's an earnings season time and two tech giants, Microsoft and Google, really disappointed. It's the first sign of the big trouble coming to the market, or is a buying opportunity? Well, we are going through the earnings reports and we are going through the charts and we are going to try to find the answer. Without further ado, let's jump straight into the charts. Okay, folks, so what is going on? The Microsoft, after the earnings report, drops more than 6% during the after hours trading, then also went lower during the regular market hours. That's what we are going to talk about. We are going to start with the higher time frame. Well, the top and the bottom been a bit better what was market expectation. Unfortunately, where the market was disappointed, it was the forward guidance, right? When it comes to the earnings, 2.35 per share, expectations were 2.3, and the revenue 50.12 billion. Against the 49.61 billion the market expectation. So here top and bottom been better. Unfortunately, as I mentioned, the forward guidance, it was what pushed the Microsoft shares lower. So what we have here, well, from the bears perspective, let's start with the negative view, right? This type of the move to the downside, especially taking out this supply and retesting the falling trend line over here as rising trend line, that's what I'm going to prove in a second, doesn't look good. The thing is that right now the bulls are trying to get their second chance based on this demand zone, and 50% of that's what we are testing, and we are trying to build the lower shadow. That's, well, looks good, but if we are going to take into the consideration the whole quarter, that's just the beginning. So with that being said, as long as we are below the monthly open, that's number one, right? As we are below the monthly open over here, and then below the last swing low base on the previous base over here, all right, as long as we are below, we were trying to go higher, as you can see over here, been rejected. As long as we are below this zone, these levels, the things looks, in my opinion, looks very ugly for the Microsoft bulls, because in my way of the thinking, if we are going to go, of course the base over here, right, is crucial, and that's where we might find the support and the buyers. But I think this broken swing high over here around 175 is gonna be crucial, and that's where we are going. With that being said, guys, if you are going to make the case over here, right, that's where all the bad things happen, okay? So from here, we might try to draw our trend line, okay? Based on the monthly chart, is a red color. There you go. Of course, we can also try to draw the rising trend line like this. And there you go. That's your confluence, and we've been rejected here. And in my opinion, that's just the beginning. That's why I think 175 is the target, at least the very first real target of this overall move down. That's gonna be also 61.8 FIP, if I'm not mistaken. We can try to make the measure. well, a little bit below, right, of this latest rally, okay? But if we are going to take into the consideration latest rally, that's going to be what you know from my Forex education stuff, 78-88 zone buying opportunity. So that's how I see the things related to the bigger picture of the Microsoft monthly chart. Let's move lower. Okay, let's move lower. Let's have a look what we have on the weekly chart. Well, doesn't look good as well, based on what we've seen on the monthly chart. And here, look what we've got. What kind of the confluence it is. It's a broken swing high on the weekly as well as the latest big weakness. There you go. So that's another confluence here. So we have monthly, we have weekly, and they are going in tandem. So again, the looks like 180, 175 is a possible target when it comes to the Microsoft chart right here, right now, right? How would you like to join the party? Well, there was an opportunity this week, there was an opportunity 4 weeks ago, those upper shadows, so it was the rejection of this base, right? So what we've seen, what we had here, it was the base, attempt to move higher, failure, so that was the possible supply zone, and we hit that twice already with the big rejection, again targeting 175. Finally, let's move lower. Let's have a look what we have when it comes to the daily chart, just not to make it too long. And well, the tech giant Microsoft doesn't look good on the daily chart as well. There was a break of the intraday or daily demand zone, right? Move to the downside, retest, and following lower. That doesn't look good as well. So as long as we are below 250, I do expect a retest of 180, 175 when it comes to the Microsoft. The forward guidance wasn't that good. A little bit of the better top and bottom line, but again, market doesn't like it. That's how I see the things when it comes to the Microsoft. The next one is a Google, next tech giant, and here it was a total, I would say, total disappointment. Right, we are going to go through the daily chart. Would be tough to go with the monthly and the weekly because of this stock split. So we are going to discuss the latest price action here and what has happened after the earnings announcement. So it was a total missed when it comes to the analyst expectations, both top and bottom lines. Especially the YouTube giant, the revenue here declined, and well, it was completely opposite to what the market analysts were expecting. So overall, after the earnings report, the stocks went down by 7%. 1.06, so $1.06 the earnings per share. The market expectations were 1.25, big miss. The revenue 69.09 billion versus 70.58 billion, another huge miss. YouTube advertising a revenue 7.07 billion versus 7.42 billion, what was the market expectations. Cloud revenue was bigger, 6.9 versus 6.69, and the traffic acquisition cost, TAC, was also lower. So only cloud stuff related business was positive. What has happened here? Well, if you are going to check here the latest rally, right over here, so the first move to the downside we didn't take out the low, right? Once we took out the low, the base over here used to work perfectly fine as the selling opportunity and the first selling opportunity. That's the way we are going to start to draw our trend line based on the daily chart, all right? And you are going to see that 3 days ago, we have had another great selling opportunity. Now, that's the bear case scenario. When it comes to the bull case scenario, that's what we have here, and I'm going to make the 50% of that, and I'm going to make here and the line, and I'm going to explain you exactly why all is here. Well, that was the latest weakness, right? 50% of that rising candle is somewhere around the green line we have here. So market fall down into the trend line, and yesterday there was a continuation to the downside. So that's the first sign of the possible move even lower. The last line of the defense, in my opinion, is this swing low here, right? So we are talking about the levels close to 96.50, 96. If we are going to move lower, then what's the easiest measurement is this latest rally. Let's say we have 104 and let's say we have like 95. So $9 lower below 96, giving us 87. That's what I'm looking for when it comes to the bear target. If we are talking about the bull target, we have to take out first this daily swing high. So we have to get the daily close above 103.50, right? And we are going to open 107.75, 108. If we are going to get the close above, then the next target is swing high around 112.50. With that being said, I'm both bearish Microsoft and Google post earnings report. Stay safe, do your own homework, do your own research, guys, and wish you great next trading session. Take care, goodbye, see you around.